We are here today with Tony Steele's CEO of Mpac Group, who is going to talk us through his latest trading update, which was ahead of expectations. So congratulations, Tony.
Yeah, good afternoon, Hannah. Hi.
Now, your statement came through, order book is flat, but equally you haven't seen any orders cancelled. So it's been the positive margin mix, as I understand, which has driven the improvement in expectations. So what do you expect to drive the order book going forward? And do you think the positive margin mix will remain?
Well, you used the word there, flat. That doesn't sound so positive. We're quite pleased that the order book is slightly ahead of last year at the year end. And because we've seen that we're in resilient markets, resilient end markets, healthcare and food, and we've been tracking that all year during the COVID crisis and checking whether the opportunities that we have in our pipeline are in those essential markets, and by and large they are, and it's proving that we're in a good space. We're very well placed in the Americas, and that's helped us to sort of keep driving that forward, because the American market, as we all know, has been very strong. As well, our general trajectory over the last few years has been to increase our presence in healthcare. That's not to say we're coming away from the food and beverage market, but increase our presence in the healthcare, and that has played absolutely one-to-one on the pandemic, because there's been this increased awareness around hygiene, healthcare, and a number of the projects that we've won this year are associated with that, and that helps to support that positive margin evolution going forward. So, generally we're pleased with the way the trading's gone in the last 12 months, and the fact that we've managed to enter 2021 with an order book that's slightly ahead of the previous year, given the pandemic.
My apologies. Perhaps the term should have been broadly flat. But you talked there about the positivity in the US. Obviously, the Switchback acquisition that you made back in early September there. Has the integration must have gone extremely well then? I know that there are some plans to bring Switchback to Europe. So talk us through the progress so far and how customers are responding to the combined offering.
Well, Switchback integration has gone really well. We're so pleased with it. Why? Because not only has the integration into the group gone well, but the business has continued on its growth trajectory. They've actually got an order book now which is in excess of where it was when we acquired the company, and we're having some very interesting conversations about extra space and extra capacity, which is always a good conversation. Maybe it's not for the local management because they're quite stressed, but for us, it's an excellent conversation, and we're actually looking at moving in the next 12 months to a larger premises. So it really has hit the sweet spot for what we're trying to do in the Americas. And as you alluded to there, the synergies across the group are already starting to happen, and it's always reassuring when you look at these things occurring organically rather than having to force synergies. I've used the phrase in the past, searching for synergies, but we're not in this case. There are absolutely organic synergies, and we're starting to sell the Switchback products organically through our Langen sales channel sales team, and they're integrating that product into their solutions for the customers. And the customer feedback is also excellent because it gives us a multi-tiered product offer, a broader and deeper product range that suits customers and the way their production plans are evolving. I think I've mentioned in previous webinars this moving towards campaign management, where they need lower specification, maybe lower ticket price equipment to do start-stop campaigns around holiday periods and special sort of celebrations in the year throughout globally. So now we're very, very pleased, and we're looking forward to, as you said earlier, again, moving the Switchback product onto a global platform, launching that product in Europe, where there's an equal size craft brewing market that we all know is growing strongly as well, especially since the pandemic, when we're spending much more time at home.
Unfortunately set to continue. And on that basis, the digital remote servicing offering, I mean, that must be becoming increasingly important. So nothing is the way it sort of smooths out your revenues as well.
Yeah, it's becoming increasingly important, as you say, and it was something that we adopted quite quickly in the early phase of the pandemic. And a lot of people were saying, well, this pandemic will, you know, will be over soon. You know, we all saw in the late summertime, the numbers were going down, and the expectation was we would get back to the norm, whatever the norm was. But it's proven not to be the case. So we're continuing with our digital technologies platform and driving that across our business, and making sure that we can support our customers remotely. And more importantly than that, the installation and the commissioning, we've come with some very novel, different ways to ensure that we've got the right capabilities on site to support customers in installation and commissioning so that they can get the equipment up and running as soon as possible. So it's changed a little bit our development program, but it's accelerated it in the same time, more away from, or to a lesser extent on equipment per se, but more on the digital technologies and features of our equipment, so that we can help the customer to be supporting them remotely, and for them to get better information from their equipment remotely as well.
Well then, Tony, as we look ahead, obviously your cash pile is extremely attractive at the moment. You've got, you said 14.5 million sterling, and you've got Switchback contributing to the growth of that number as well. So what are plans for the cash? Are you reinstating dividend at some point, or, and given perhaps the distressed nature of some areas, are you looking at some attractive acquisitive opportunities?
Well, yeah, it's good that you bring that out. It's been one of our strong focuses over the last few years, is cash management. And we can demonstrate now that we're generating positive free cash flow, which is really important for us and leads into that sort of conversation about dividends. As yet, we've not reinstated the dividend, and it's a constant conversation with the board. So we will be reviewing it before the prelims in March. You know, with a positive view, because we are generating free cash flow, and as you say, we've got a cash pile which was diminished by the acquisition of Switchback, but we've managed to still start to build those cash reserves up again. In terms of what our plans are with the cash, as we've said all along, it's primarily there to support organic growth, and also to support potential acquisitions. And be clear again, we're not really in the game of salvage. We don't want to be buying too much, distressed companies. We want to be looking for acquisitions which, first and foremost, fit our strategic plan, and allow accretive growth in the profits from day one, and an established management team that's already running the business, and we can provide group synergies to those businesses. So yes, that's an important part of what we're doing. We've got a very active acquisitions pipeline. We will keep you posted on any positive news in the future.
Thank you. Okay, final thoughts then. Looking ahead, you said it yourself, last the summer we thought we might be out of it soon. Mr. Whitty says we might be going into lockdowns in the next 2 or 3 winters. So how important is this fast recovery plan you've got in place to the ongoing success of Mpac? Because it feels like we might be virtual for a very long time to come.
Well, it's really important. It's not just a fast recovery plan in the sense of we get back to normal. It's a more of a fast pivot plan to adapt the business to the new environment. And I share the view it's going to be potentially long term. Why? Because we're in the equipment supply game, and we know that a new piece of sophisticated equipment has a lead time of 9 to 12 months. And that is the norm across the industry. So all this increasing vaccines and testing needs to be facilitated in some way. So we just know that that's going to take a period of time. So I think our plans are that the current situation will continue for a large part of 2021, and that will enable us to put more emphasis on digital technologies and make sure that as Mpac we stay ahead of the game, and we're providing that excellent level of customer service, and we can help our customers to provide solutions to the current pandemic.
Sounds extremely encouraging, Tony. So thank you. We look forward to hearing from you in March when you put your results out.
Thanks, Anna. Appreciate your time.